Hello traders, this is Ala Peters on November 28th. Take a look at this trade. This is brand new historical highs. Price reminding you, if you're trading with institutions and not against them, and if you understand that institutions continue buying every single pullback, and S&P continue creating brand new historical highs, you never trade against institutions. You never short the markets. This is your day trading chart. This trade currently 3 points later reminding you, moving your stop outside of break-even and respecting the rules is everything. Schlepping a trade randomly, being a speculator, shorting historical highs will never work. You are witnessing what a stepping stone this is. This is decision point 2, key target, your stop outside of break-even. The trade is not on 1 minute chart. However, I reverse the trade to 1 minute chart so you can witness the accuracy to the tick. This is the levels that been present in the trading room for a week. This is what we witnessed yesterday. Key Fibonacci resistance in a play. I warned you, this is not the place to buy. We discussed in the room that if you understand that institutional bias remains firmly bullish, buy as low as possible at institutional support. And remember, hand holding will never work. Flawless bullish opportunities played out. Rules had been met. This morning we dealt with quite a pickle. The level was ultimate resistance. This morning was ultimate support. I warned you, shorts are not an option. I warned you. If you choose to trade against institutions, if you choose to trade into proprietary Fibonacci support, your success rate will drop to less than 15%. Institutions continue buying every single pullback. You as a day trader understand that bullish rally overextended. You as a day trader who understands that trading with institutions and never against them is the only way to trade, continue buying every single pullback. This is your long-term institutional chart. This is a chart that's been present in the trading room for years. Do you remember reversal zone? In 2013, 2014, S&P at 1800 in 2014, 2015, 2016. Bullish rally taking a pause at this proprietary Fibonacci resistance. When this level is out, bullish rally skyrocketed. And as we're discussing with students in the course each and every day, shorting, silly thing to do. Bullish rally is unstoppable. Conquer your instant gratification. Conquer your trigger happiness. Institutional orders are long. Fibonacci shows that each and every day. So, it doesn't matter if you're holding your position for years. It doesn't matter if you're holding your position for a couple of minutes, a couple of hours. Strategy remains the same. The only difference is risk management and trader psychology. Exact same levels. 1 minute, hourly or weekly. If I would convert this chart to 5 minutes, the accuracy will be the same. Look at that. Key Fibonacci support respected. Do not short into. You want to convert this chart to 3? Why not? It's all the same. You want to convert this chart to 15? Why not? It's all the same formula. Price action remains the same. If strategy works, it should work on any instrument, any time frame. Why wouldn't it? If I remove the name from this chart, you wouldn't have a clue what this is. It's all the same. Price remains identical. And that's what you will witness tomorrow on oil. Remember this chart? It's been present in front of you for years. Power of the method in trend inception. This is bullish rally from reversal zone that's taking exact same pause at Fibonacci resistance. Very, very bright pink resistance that became key Fibonacci support few weeks ago. And as I said for years on S&P and as I said on oil, you know the rules, you know what to do. Oil heading drastically higher. But pulling a trigger randomly, speculatively will never work. Knowing the rules for your entry, stop and target is the key. No matter if you trade oil 1 minute, no matter if you're holding position for days, weeks and months, no matter if you trade Amazon. Look at that. It's exact same level where Amazon had been sitting for the last few days. Do you pull a trigger randomly? Do you buy into this resistance? Never an option. Do you choose to trade hourly on Amazon? Why not? It's exact same accuracy. Look at that. Is that possible? Absolutely. Price action the same everywhere. Doesn't matter if it's Amazon, doesn't matter if it's oil. Doesn't matter if it's a 15-minute chart. All the same formula. Once you master Fibonacci method, all you have to do, decide what you want to trade. Is it oil? Is it S&P? Is it Amazon? Is it 1 minute? Is it 5 minutes? What would you like to trade? Choice is yours. And that's very powerful reminder. Reversal zone is present. Do not buy into it. Clear on that? Identical as what happened on gold. This is your investment decisions. Gold weekly reached reversal zone and reversed, just like S&P 1 minute chart had done. Are you a day trader? Are you an options trader? Are you a position trader? Why not? It's all the same. The only difference, risk management and trader psychology. Students in the course From Beginner to Hedge Fund Trader Mastering the Method that applies to any instrument, any time frame, that can be traded on any platform. Group education 8 weeks, private mentoring 16. I live and breathe Fibonacci, and after one class you see very, very clearly using anything other than Fibonacci is simply afterthought. Market is flawless Fibonacci puzzle, and that's what taught in live online classes. Modules are only supplemental. If you are signing up for private mentoring, group course included. You learn proprietary Fibonacci strategy, proprietary Fibonacci tools that you can install on any platform you will choose. I am with students 4 or 5 days per week with key classes on Monday and Friday, with the exception of this week, key class on Thursday. As Price reminding you each and every day, you master this, you can trade anything. As students stating very, very clearly on the website. Students from beginner to hedge fund trader sharing what they trading and how. You want to trade indexes, stocks, futures? You want to trade the ETFs? Is your account 2K or is your account like Joseph 7, 8 figures? Choice is yours. Are you a stock trader? Are you ETF trader like Jim? Are you an options trader like Jean and William? What you want to trade is your choice. Listen to the students and never hesitate to contact me. All the information online, and I always look forward hearing from you. As S&P continue heading higher as we speak. So feel free to email or call me 925-257-4298 or info@fibinstitute.com. As S&P continue creating brand new historical highs and reminding you, key Fibonacci resistance became key Fibonacci support. Look at that. Are you surprised? Should not be. That's the same exact thing that gold had done. That's how you're protecting your investments. Identical formula. The only difference, you're holding gold for months and years. Identical levels. All the same. The only difference, you're holding position on this chart for minutes, not years. Identical levels. Identical price action. Always in advance. Never afterthought. Never after the fact. Because Fibonacci is the only natural predictive tool in the market. Indicators artificial, delayed, stuff that developed after the price made a move. That pure and that simple. Brand new historical highs on S&P, no surprise whatsoever, no reason to short whatsoever, none. So if you managed to pull 3 points on S&P this morning, 1 lot $150, 10 lots $1,500, 20 lots, do the math. You learn the rules, you apply the method to 1 lot, you remain consistently profitable, you can add 1 lot per month. You prefer to trade options, why not? As Sam does, as Michael does, my dearest friends for life. Choice is yours. What do you want to trade? S&P is frozen, no surprise, but key Fibonacci support respected. What a flawless Fibonacci puzzle market is, each and every day, each and every time. As again you will witness tomorrow during oil news. That only if you trade with institutions and never against them, you will succeed. And that remains constant. And that remains the key. Learn the rules and apply the method to any instrument you will choose. Trail to outside of this support. Look at that. Is that possible? That's the exact same thing that Apple had done. Do you see that? That's your investment decisions. 2015 Apple collapsed completely despite excellent earnings until this Fibonacci support, where buyers stepped in with vengeance despite worst earnings in 13 years. And this was worthless correction. Horrific earnings, and Apple had doubled since, because this Fibonacci support had been respected. As you just witnessed on S&P. It's all the same. You want to trade Apple, or you want to trade S&P as a day trader? Identical levels. Every day, every time. What you choose to trade, absolutely up to you. Key formula in the course, never acquire position into reversal zone. It will never work. Buy before. Trail carefully when you're inside reversal zone. That pure and that simple. And that's a very powerful reminder why I named this level reversal zone. Never be tempted to buy in this area. Ever, ever, ever. Will never work. Expect reversal. Boom. Exact same thing as gold, exact same thing as oil, exact same thing as S&P as Apple. It's all identical formula, as price action remains the same. The only difference, risk management and trader psychology. And that's the focus of the